Billionaire investor and Forbes columnist Ken Fisher has been selling emerging market stocks, particularly the funds that buy emerging market stocks. He says that basically there's too much frothiness. He likes the economies in the emerging markets, and I think he's onto something here. If you look at the MSCI Emerging Market Index, it's up 150% since its 2008 low. I think that people have gotten a little too giddy here. And remember, this is a very volatile sector because these stocks don't pay dividends.
Well, there's a lot of risk in them, and it's not just the risk of a business not having good earnings. There's the risk of expropriations, screwed up economies, all kinds of horrible things. There's something else that may be going on here, Mike, and that has to do with the fact that you could have a genuinely successful economy like China, where the profits don't really redound to shareholders. The economy grows at 9% a year, but the stocks don't grow at 9% a year. Somehow that money trickles into other people's hands. That can happen in China, it can happen in Brazil, it can happen in India.
Yeah, I think the safer way here, if you want to play emerging markets, is to buy something like the S&P 500 fund from Vanguard. No sales charge, and about 35% of the earnings from S&P 500 companies come from outside the U.S. So I think this is a better way to play it than by buying emerging market stocks directly right now.
Yeah, here's a good sector to look at. How about pharmaceuticals? They sell abroad. If you want to get a play on Brazil having a rising economy, own a drug company that sells into Brazil. Maybe Pfizer is the way to go.